You'd like to purchase a home, you know you need a mortgage, but should you call a mortgage broker or call your bank? And what's the difference? On today's Lessons in Lending, we're going to answer your questions, so don't go anywhere. Let's talk about interest rates. That's what people are most concerned with when they call me. Basically, banks are set with one rate sheet. They have one rate sheet that's available throughout their bank. With a mortgage broker, we have many, many options. We can go to all different lenders with your specific scenario to find out who has the best rate. A lot of times people ask me, well, aren't you a middleman? Don't you charge something? The bank actually buys the loan from us as a complete investment. So it's a ready-made investment for them. So we take all that work away from them. So that's computed in the interest rate. So you're not paying more for that service. As opposed to a bank, where a bank has overhead that we don't have, quite frankly. If you walk into a bank, you're going to see marble floors and chandeliers and glass walls with many people and levels of management, that type of thing. We simply don't have those costs. And that's how we compete in the marketplace as far as interest rate. And that's how we beat banks all day long. Let's talk about quick approvals. Typically, we can get an approval completed within hours, not days. And it's a big difference when you need that pre-approval. When you're looking to buy your home, you're looking at that perfect dream home you found, and you need a pre-approval letter. We're able to get that within hours of you calling us. We simply run the income documentation or in credit review, that type of thing, and we can do it immediately, very, very quick. And a lot of times that's what's needed in this marketplace. So we highly recommend you have that actually before you begin shopping, but that approval process is shortened substantially with the mortgage broker. As it relates to quick closings, when you're making an offer on a property, that seller is considering typically many offers. That's the scenario we're typically in today. And so when your offer includes a closing date that's 30 days out, that's much more attractive than someone that needs 60 days to do the loan, which is typical with banks. We're seeing 45 to 60-day closing periods with banks when we're closing in under 30 days. It's a big advantage when you're trying to buy that home and you're competing with other offers. So that quick closing is an added benefit that doesn't cost you anything, and it gets you in your dream home sooner. As to options available, a bank has options. They typically have VA, FHA, conventional loans, and jumbo loans. However, different lenders have things that they specifically have strengths in. Some investors are very solid with 580 to 620 FICO scores, which is typically a low FICO score. Other banks won't even have a conversation with you if you have below a 640 score. And so different lenders have different appetites. And so when you apply for a loan and you're denied, it can harm you because you have several credit inquiries from that point. We pull your credit one time, we review your credit, and then what we do is we look for the lenders that are most apt to give you your approval at the best rates. So having that ability to have many options as opposed to just the options of one lender is a great advantage to us and to you when you're out purchasing a home. Credit overlays. That's another reason that mortgage brokers have an advantage over banks. Banks have something called credit overlays, and what that simply means is loans are purchased by Fannie Mae and Freddie Mac. You may have heard of those terms. They're government-sponsored enterprises. So that's what's called the secondary market. And without getting too complicated, the way it works is it was set up by the government to purchase loans to create an active market for those loans to be sold to institutional investors. And that sounds quite complicated, but really it's not. The way it works is this. Your loan is someone else's investment. And so when that investment is sold, it's looked at as what's the quality of it? Is this person someone that pays their bills on time? Do they have assets, substantial assets to put down on the property and equity in the property? And do they have sustainable income, like a stable income situation? So those are the things that they look at. And that credit grade is what sets the value of that loan. And so banks like to keep that standard very, very high because they are oftentimes using depositors' funds to initially fund those loans. And so they have credit overlays, a policy of their bank where investors that buy those loans through Fannie Mae and Freddie Mac, we have investors that don't have any credit overlays at all. So if the computer will approve it through Fannie Mae and Freddie Mac, we can get that loan approved. It's an enormous advantage because we have no limitations at all with some of our investors, and some have overlays that are minimal, and some of them have better rates. And if that's the case, we can go with those investors that purchase that loan. They purchase your whole loan. It's an investment that's sold to Fannie Mae and Freddie Mac. So that's how that works. But simply for purposes of applying for a loan, if you want to go with someone that has no credit overlays, if you had a situation where you had a repossessed car 24 months ago or 3 years ago, the bank probably won't take that. However, one without credit overlay would be able to take that loan and get it funded for you. In other words, again, you can purchase that home you've been dreaming of with some minor credit issues, and it's not a problem at all. So definitely a big advantage there. Problems with the loan during the process. Quite often things can happen when you're in the process of purchasing a property. For example, if you were laid off during the process of applying for a loan escrow to purchase a specific home and you lost your job, a number of lenders would have a hard problem with that, would want to see you back at working and stable on a job. Where that happens with us, we have investors that don't bat an eye at that. Other ones would. And if that is the case, what we can do is we can switch investors, put together a letter of explanation why the employment ended and that you're gainfully employed in the same line of work. And it's no harm, no foul. We can just keep on moving forward. And a lot of times, someone has a credit hiccup, something comes up on the credit where there was a collection or lien of some support, child support lien, those types of things come up. When those things come up too, they can be taken care of, eliminated, removed from your credit. And we can do this manually, basically through the bureaus, and get it right back into underwriting or put it with another investor that sees a perfectly clean file. So it's another advantage we have where we can work, especially if we have time. If you give us 30, 60, 90 days, you're just beginning the process. We can actually get a lot of those things taken care of way before we even approach an underwriter. So it's another advantage we have compared to banks. So those are a number of the advantages we have as a mortgage broker. It's why I work as a mortgage broker as opposed to a bank. I worked with a bank for a few years, and for these reasons is why I left and why we started Unitas Lending. A passion to help people and to solve these problems and to help people get into their dream home. And that's my dream for you. And so I hope this video helped you out. If you found this video helpful, drop a like below. And again, my name is Brent Starts, and we'll see you on the next Lessons in Lending.